Hello, everybody. This is Kimchi Crypto. Today, I'm going to talk about the worst time is over. Let's dig in. Bitcoin gains above $87,000 alongside XRP Solana as Trump tariff concerns ease. One analyst said reports of the White House taking a more moderate approach in pushing tariffs provided some relief for investors. The crypto markets are surging as investors respond positively to Trump's more cooperative stance on tariffs, set to take effect on April 2nd. In addition, the Fed's focus on long term inflation trends. The tension of tariffs war between United States and other countries, this can go lower or it can go higher. What do you think? I think the former, because if high tariffs are really imposed on every single country on the earth, that could be a total disaster. Nobody wants a disaster, even Mr. Donald Trump. What he's doing right here is to get as much as possible from that type of negotiation with the tools of strong dollar, higher tariffs, and the higher rates. And after he gets everything he wanted, it's gonna be a somewhat, you know, a reconciliation. I mean, the Fed is also they already decreased the size of QT quantitative tightening by 1/5, which is very good for crypto and stocks because that is good for liquidity. However, the White House is seeking a more targeted approach rather than a broad one in rolling out Trump's reciprocal tariffs, potentially giving investors a break from tariff worries. It could be a gradual tariffs policy, either it could be targeted tariffs policy. Why? What Trump really wants is lower inflation. Why does he want lower CPI, lower PPI? After inflation subsides, Fed can lower rates and print as much US dollar as possible in order to make America great again, which needs weaker dollar anyway. Bitcoin could hit 110K before 76 retest as Fed's back to pumping liquidity, Arthur Hayes predicted. The expected price surge is based on a shift in Federal Reserve's monetary policy from QT to QE. He bets Bitcoin hits 110K first. Why? The Fed is going from QT to QE for treasuries. Hayes dismisses the potential negative impact of tariffs on Bitcoin's price. He believes that inflation is transitory. Is it? We cannot predict the future for sure, but we can check out the inflation data in Trump's first term from 2017 till the end of 2020. When you take a look at this chart here, CPI index for the last 50 plus years, I checked out this the Trump's first term, which is from 2017 till the end of 2020. The CPI was relatively lower than most of those periods in the past. And Trump's first term, 2017, 2018, 2019, and 2020, the CPI is relatively very lower than its previous, several decades, as well as CPI printed in Biden's administration. What I'm trying to tell you right now is further around tariffs, further around strong dollar, inflation, recession, wars, things like that, and higher rates, the further around all those things, I think this is somewhat exaggerated. People are too much bearish in crypto, in US stocks right now. If you want to make a huge profit, whether that's crypto, whether that's your stocks, it's high time to double down on blue chip points, whether that's Bitcoin, Ethereum, Solana, XRP, Cardano, depends upon your appetite, rather than running away with empty hands right now, right? According to Marcus Dillon, he is the 10x research founder. He is also telling us this similar type of thing. Fed's dovish stance on inflation and Trump's flexibility on tariffs are two catalysts that could alleviate market concerns and potentially boost investor confidence. The Fed signaled it might look past short-term inflationary pressures, laying the groundwork for potential future easing. As you can see here, is the chart of 2017 U.S. economy versus DXY inverted 2-month lead. This chart tells us that U.S. economy is inversely proportional to dollar index. Weaker dollar makes U.S. economy great. This is the current chart of U.S. economy versus DXY inverted 2-month lead. This chart tells us that this year, 2025, would be very similar to 2017 again. It's not perfectly matched, but just the overall direction would be somewhat similar. Again, weaker dollar will make US economy better, great again. Whether it's going to be like this or be like that doesn't matter. Direction is almost confirmed. Direction points to weaker dollar and strong assets, including crypto. US economy versus GMI Financial Conditions Index. Financial Conditions Index was made by global macro investor Raoul Pal, and this index includes dollar, rates, and oil. If this red goes up, financial easing takes place. Weaker dollar, lower rates, and oil price goes down. And if this red one goes down, financial tightening goes on. So, this is a 2-month lead indicator, and it rose up significantly. We are in, today is March 24th, but it already picked up and reached very high in May. What does this mean? For the next couple of months, financial easing is going to take place. Dollar is going to be weakened. Rates is going to go lower. Oil price also goes lower as well for the next couple of months, which is good for the US economy as well as stocks and crypto. Global M2 is very, very important. Liquidity is everything in crypto and in investment in Nasdaq as well. Well, at the end of last year, liquidity declined. I circled in red here. Liquidity, global M2 in black declined, whereas Bitcoin price rose up. There existed a bit of disparity between the two, but in the end, Bitcoin followed liquidity, which means Bitcoin price declined significantly. But what took place was the global M2 picked up, and this is a 10-week lead indicator, which means 10 weeks later, global liquidity will increase, and this will affect Bitcoin price as well as altcoin price as well as US stocks. It's going to follow later. What do you think? Thank you for listening.